Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts and do some TA. As you can see from that intro, we've been going up and down and up and down. This is the month of May. We've been playing in this range around 53,000 to 59,000 and we've just been having these big swings. It's been quite difficult to trade, and just recently we have had this drop here from 58 down to 54. So are we going to go lower? Are we going to break this range? And how can we trade this? So if that sounds interesting, stay tuned because we've got a lot to get through. So just quickly, I just want to show you I am in a trade at the moment. I did put in a short here around 56,300. I have taken profits along the way and I will cash out here more if we do go back up. I do have some more take profit areas down here. But recently my last trade wasn't a good one. I was trying to get a breakout trade at the top here. I did think we were going to actually break the 60 and go higher. And then I held on to that trade for a bit too long. I bought more on the way down to lower my average buy-in. And I held it for a decent time, and then this wick caught me out here. And I did end up just taking the loss. So I do want to talk about the losses and the profits and be transparent with that. And currently in this trade, I have cashed some out. I've taken close to $1,000 profit and currently a $1,400 trade. It's up 66%. And this was at 20 times leverage, which was a bit risky. I normally do 10 times leverage, but I'll explain why I did go 20 times leverage on this one. So this is the market Cypher indicator by CryptoFace. It is a paid indicator. And the reason I went short here is because of this, what's known as a blood diamond here on this candle. And it did happen when we were at the $56,000 area. And I did a high leverage short because we don't get these blood diamonds very often, especially on a 4-hour chart, which is more reliable. And if we just look back here, the last time we had one was up here, and it did lead to this big drop. We had another one here, not quite as big of a drop, but still a decent one from 56.9 down to 50,400, so still 10% drop there. So these are quite reliable, these blood diamonds. And the one before here also went from 51.6 down to 43,000. And I just want to compare quickly Bitcoin and Ethereum here ever since the start of the year, and we can see we've had this divergence, and Ethereum since the start of the year is up about 470% and Bitcoin is up 93%. So quite a big difference here. I do think eventually Bitcoin will go on a similar run here and catch up to Ethereum. I just want to start looking at these wedge patterns here. 2 falling wedges, 1 rising wedge, and I am seeing this pattern a lot recently. And I just want to look at this first pattern here. And what we can see is we had these 3 touches on the bottom trend line after zigzagging down between these lines. And then after the 3rd touch, we didn't quite come to the bottom trend line, and then we broke up. And on this second falling wedge pattern here, we can see we had 3 touches on the bottom trend line, zigzagged our way down again. And after this 3rd touch here, we came down, didn't quite come to the trend line, and then we broke through this pattern and went higher. And this current pattern here was a rising wedge, so the opposite. We had 3 touches here on the trend line and zigzagged our way up, and after the 3rd attempt here we didn't quite come to the trend line and then we broke down, so the opposite of the falling wedge here. So we are noticing these patterns quite a lot, and even on the smaller time frames we see the same thing. 3 touches on the bottom trend line, we zigzagged our way down, we didn't quite come down after the 3rd touch, and then we broke up, and this pattern did go higher here, and this was back on March 26. So where are we looking for Bitcoin to come down to here? Well, there's a few possibilities. If we draw the fib retracement here from the bottom to the top, basically off this wedge, and we look for that golden pocket, we can see that lies in the range of between 51,500 and 51,800. So we could possibly just come down to this level and get a bounce and carry higher, and perhaps just make this W shape here, going back to this 618 level, and then breaking the neckline and going higher. That's one possibility, although I think possibly we might be going a bit lower. So looking at the VPVR here, the amount of volume traded at certain price levels, we can see we had support here around this 54,500 where we are currently at. but below this there wasn't much support until we get down to these lower regions around 47 to 49,000, and we can see that's where we bounced last time on this bigger pullback. And Bitcoin has been in this range here in this channel. We dropped below here, and since then we've basically been zigzagging in this channel, and we have wick below currently. And I have these dotted trend lines drawn here, and this will be more clear on the 4 hour what I'm looking at. So what I'm seeing here on the 4 hour chart is, if we just draw the bottoms and the tops here, I am seeing what looks like a head and shoulders pattern, and we are currently at the neckline. If we take the distance here from the top of the head to the trend line and just put it down here at the breakdown point, we can see that this measured move would take us to 48,391. So that is a possibility. And we can see it would take us down to this bottom trend line here. And this trend line is just connecting the bottoms here. So there is some confluence here. And this is also where that VPVR was showing a lot of volume traded in this range. And another point of confluence, if we just pull up the 21-week exponential moving average, what we can see here is currently the 21-week exponential moving average is at 47,300 approximately. And by the start of next week, it will be a little bit higher, perhaps at 48,000. So it is quite close to this measured move, which is around 48,200. So perhaps we are going to come down to this 21-week exponential moving average. This would still be a higher low compared to the previous low here at 47,000. So it's just something to watch for. There are a few points of confluence there. Also looking on the daily chart here on the RSI, you can see we have been in this channel, and it does look like we're coming back down, possibly to test this line. So there is room for the daily RSI to come down as we do come down to meet this target. And we can also see the stochastic RSI has room to come down over the coming days, and possibly staying in this lower range going into next week. And just looking on the CME futures chart for Bitcoin, you can see we did come up here. We pretty much filled this gap. We got quite close to it. And now since we did do that, we are coming back down. And I do have this blue trend line here on the futures chart, just connecting the bottoms here, the tops here. And if we were to have a pullback to this line, this would be around the 48,000 level. So similar to what we were looking at before. And this would also be the 0.5 fib retracement, which is at 47,200. Just taking it from this low here, as we have been making higher highs and higher lows. And from this high we have been coming down, and we've still got a higher low here, and we can see we came down to that level on this previous pullback pretty much. Also, if we look at the 21-week exponential moving average here on the futures chart, this orange line, we can see that currently it's at around 47,500, and obviously by next week it will be slightly higher. So you can see those three things pretty much line up. This blue trend line, the 0.5 moving average, and the 21-week exponential moving average, which is at this level. So I would be looking to go in a big trade around this area. And that would also form a double bottom on this pullback. So why is this 21-week exponential moving average important? Well, I've talked about this before, but I think it's important to go over as it is looking to come into play. During that 2017 bull run, we see that we came back to this 21-week exponential moving average several times on most of these pullbacks. We did wick a bit lower some of the time, and we also came back here on the RSI to this red horizontal line and coincided with these pullbacks. And currently we can see we have been zigzagging our way down, coming towards this red line. Currently we're at a 59 rating, 60 rating, and this red line is at a 54 level. So I do think both of these might coincide, and we would come back here to the 21-week exponential moving average around 48,000, and also to this red line, and there we would get a strong bounce, and perhaps this weekly stochastic RSI would start coming up and we can start going back up again and continuing this bull run. And another thing I want to point out here, this is the Bollinger Bands. And basically when these Bollinger Bands squeeze, it can tell you that a volatile move is coming. It won't tell you the direction, but it will tell you that a volatile move is coming. And I just want to look at it on the weekly here. You can see they've slowly been coming together. But the main thing I want to look at here is this middle trend line of the Bollinger Bands. Currently it's at 49,000. And if we just look back in the past, in the 2017 bull run here, we just zoom in, we can see when we got above this top white line here of the Bollinger Band, and we did get a pullback crossing below, we did come back to the midline here, this yellow line. We can see we did it several times here on these pullbacks. Here we came back to the yellow line, and the previous all-time high was around this level at 1200, the 2013 all-time high. But once we did break above that and had this run, we had these two main pullbacks here, and they both came to this middle yellow line on the Bollinger Band. So that's another thing to watch for, and something in a similar area to that 21-week exponential moving average, around 49,000 area. And this would line up quite nicely also with the bottom of the bodies of these candles here. So for the moment I'll stay in this short. I will cash out the rest of it down in these lower levels, and I'll probably look to go long at this golden pocket area, because even if we are going below this into that area we talked about, around the 47, 48, 49,000 area, I do think we would get a bounce here first. So you could play the bounce here and just put your stop loss in a profit after we are above it. And if that is the bottom, then you'll have a nice long trade. If it isn't, well, you can cash out in a profit on the bounce and then look to get in lower where that 21-week exponential moving average is, and all those things we talked about with those points of confluence at those levels. So how will we know when we are at the bottom? What signs can we look for? Well, we can look for divergence. This is on the 1 hour chart. You can see here using the bodies of the candles, we had lower lows on the price action and higher lows on the RSI, and that did lead to the turnaround. Again, the higher the time frame, the more reliable. So the 4 hour would be more reliable with divergence than the 1 hour. We can see on here on this pullback, we did have lower lows on the price action and higher lows on the RSI, and that's bullish divergence, and it led to this pump back up here. So look for something similar, and we could play that move. And there is also another one here on the 1 hour. We can see lower lows on the price action, higher lows on the RSI. So this is a very good way to look for bottoms using this divergence, and also tops. We can see here we had higher highs on the price action, lower highs on the RSI, and it led to this drop down. So currently there aren't any divergences on this bottom. And just looking on the 2 hour, we can see possibly a bullish divergence forming here. Using the bodies again, we have lower lows on the price action and higher lows on the RSI. This still could come lower, so we would need to see this come at least above this candle, and I would like to see it above 55,250, let's say, to give us a bit of confidence that we are going to have a bit of a rise back up again. And that would be a bullish engulfing candle if we do close above the body here. We can see it's not present on the 4 hour. This is a lower low and a lower low on the price and the RSI currently. So we just have to keep watching what happens here and look for those divergences, because they are quite useful for finding bottoms and tops and can be a good way to get into a trade. And personally, I'll be watching this golden pocket area, which was around the 51.8, 51.5 level, and I would be looking to go long here for at least a small bounce if it isn't the bottom. For it to be the bottom, we would have to start seeing higher highs at least, which would be back up above 58,000. And if we do go lower here and break this area, then I would be looking for that double bottom area around that 47 to 49,000, where that 21-week exponential moving average is coming in, and that 53 level on the weekly RSI, and also some of those trend lines that we talked about. So I hope that was interesting. Good luck with your trading. I know it's been quite difficult lately with these up and down swings. So thanks for watching. Hope you enjoyed that. I'm Bitcoin Mamo. See you next time. Bye.
To better explain Bitcoin, I'm going to walk you through Satoshi's white paper to help everyone understand its network and its value. So here we go. Page 1. Bitcoin, a peer-to-peer cash network. This is what makes Bitcoin so strong, and this is precisely the reason why Methane Coin is trashed. There's no proof of work on its blockchain. Now, I want everyone to get up, and let's all together throw these methane coins in the gutter and start using the real network, Bitcoin. Who's with me?
But look at how many methane coins I can have.
Guys, this is exactly what we just went over. Whoever's behind it controls the entire supply. They could puke trillions of them if they wanted to. They're meaningless. It's a total complete scam.
Go methane coin.